Okay, so let's have a look at working 6 for the 2022 exam paper for company accounts McCormack. So this question or this adjustment is saying patents which incorporate 4 months investment income are written off over a 5-year period commencing 2020. So it actually started last year. So they're trying to catch you out there. So it's written off over a 5-year period. So when we come to find out how much is supposed to be written off each year, we're going to be divided by 4 instead of 5. So anything to do with this patents adjustment, and if it's incorporated investment income, what I like to do is there's 4 steps that you should follow. 1, you need to find the investment income. So you want to find out how much investment income is for the year. You're going to add that onto your operating income. 2, you're going to find out the investment income due. That's going to go into your balance sheet as your current asset. You're going to find your patents. That's going to be the figure that goes into your balance sheet as a intangible asset, and then find out how much your patents are going to be written off each year. That goes into your profit and loss account as an administration expense. So first thing you're going to do is, because patents which incorporate 4 months of investment income, so we've got our patents figure. For some reason, someone has recorded 4 months investment income that received in as part of your patents. So what we need to do is we need to take it out of your patents and put it into your investment income. So the first thing we need to do is find out how much your investment income is for the year. So we're going to find out for our investments. So we've got 4% investments at 75,000. That was gone on the 1st to the 4th. So you've got the 4th, 5th, 6th, 7th, 8th, 9, 10, 11, 12. So you've got 9 months. So you're going to put 75,000. You're going to multiply that by 4%, and then you're going to multiply that by 9/12, because you only have the investment for 9 months and not a full year. So the yearly amount that we have is 2,250. That goes to add your operating income or operating profit in your profit and loss account. Okay, so we have received some of this. So we received 4 months of it. So we're going to see how much of that we've actually received. So 2,250. We're going to multiply that by 4 divided by 9, because we only have it for 9 months. We received 4/9 of it. We received 4 months of it. So equals . So we have received 1,000. So what's left to receive then is the difference between the two, and that's going to be your due figure. So 2,250 is the yearly amount. We received 1,000 that was incorporated in as part of our patents. So what we've left to receive, which is the due amount, is the 1,250 that goes into your balance sheet as a current asset. So our investment income for the year, 2,250, that's taken from 4% investments that are on the 1st of the 4th. So you want to have it for 9 months. Then as 10 is down here as part of the question, that for some reason we have received 4 months investment income, but for some reason we've put it into our patent. So that 4 months that we have received, okay, is 1,000. So that means we need to take it out of our patents and put it into our investment income. So we're putting into our investment income here, and that's telling us how much we've left to receive, which is 1,250. So that goes into your balance sheet as a current asset. So the next part now is to take this 1,000 out of our patents. So our patents, so the amount that we have, that's going to be taken from the trial balance, is 64,000. Now, just remember with this. Okay, so patents, so I do a T account here for you. I'll make this a bit bigger. Okay, so if you do a T account, Okay, this is going to represent our patents. So remember, patents is an asset. Income is a income. So if we want to increase an asset, we put it on the debit side. If you want to increase an income, we put it on the credit side. So this is our income. Okay, so we've increased our income account already by putting the 1,000 on the credit side. So to take it out of our patents, we need to add it back on. So this 1,000 that we have here, we're going to add it on to the 64,000. Why? Because it's debits and credits. So I said we need to take it out of our patents, and for this debits and credits here, we're going to add it on. Why? Because income is a credit, and to increase a credit or to increase an income, we put it on the credit side. So a double entry would be credit the income account, debit your asset account, which is your patents. So assets, we're going to have 1,000 here. So that means that our patents is going to be 65,000. So it's our new patents figure after taking the 1,000 out of it. So now we can find out how much we're going to write patents off each year. So 65,000, and we're going to divide that by whatever it says in the question. Now it tells in the question here, it's written off over a 5-year period. So that's grand, but it started last year. So we've 1 year already done. So be careful with that. So we're going to divide that by 4. So we're going to write off our patents by 16,250 each year. That's an expense that goes into a profit and loss account, and it goes underneath administration. Because we're writing our patents off by 16,250 each year, that means that the value of our patents at the end of this year is going to change. So we know that the amount of our patents is 65,000 at the start of the year. We have to write it off by 16,250. So that means that the value of our patents at the end of the year is going to be 48,750. That goes into your balance sheet as an intangible asset. Okay, so it's 4 parts. Anytime that you get investment income that's patents that incorporates investment income, find out your investment income for the year, find out your investment income due, find out what the patents are for the year and recalculate it, and then find out how much the patents to be written off are. So we've calculated our investment income here to be 2,250. So we took the 75,000 from the trial balance, multiplied by 4%, multiplied by 9/12. That goes into your operating income because it's income that we're going to receive. Then we need to find of this 2,250, how much have we incorporated in our patents. So we're going to take the 2,250 multiplied by 4 because it says in the question that it's 4 months, divided by 9 because we only have it for 9 months. So that gives us 1,000. So we take that away from 2,250. That means we've got 1,250 due to us. That goes into your balance sheet as a current asset. Your patents then, so if you take this 1,000 out of our patents, remember patents is an asset, income is an income. So to increase in income, we put it on the credit side. Increase in asset, we put it in the debit side. That's why we're adding on this income of 1,000 to give us 65,000. 65,000 then is written off over a period of 5 years. Remember, it commenced in 2020, so we're going to divide it by 4 instead of 5 because 2020 was last year. So that's going to give us 16,250. That's to be written off each year. So that means that the value of your patents at the end of the year is going to be 48,750. So that's your 6th adjustment for the 2022 exam paper, company account and McCormack.